Welcome to the Astranti Operational Case Study Pre-Scene Analysis videos. This is for the February 2016 exam, which is on First Class Bakery. So before we begin, I'm just going to start by telling you a little bit about myself and a bit about how we are going to approach the pre-scene and the things we're going to be looking for. So my name is Peter Steffer. I am the Director of CIMA here at Astranti. I've been with the company since 2013, and during that time I've written and marked many of the mock exams that we provide, and I've also written mocks for other tuition providers. I've also written many of the study texts that you may have used. And if you see in the bottom left hand corner there, my Facebook page, on the run up to the exam I'll be posting all kinds of hints and tips. So now let's take a look at the video series themselves. So for starters, I'm going to go through the pre-scene section by section, picking up on all the key points, the things that you should be looking for, the things you should be pulling out of the text and analysing. I'll then be applying them to the case itself, what they mean for the company and what it means for the industry that it operates in. Applying certain business models to it, ones that you may have learnt in your objective test studies, and the likely exam issues. So looking at it and thinking, based on this information, a likely question is X. And also other just hints and tips, general things that will help you gain extra marks in the exam. I'll then go on to my strategic analysis video, which will be taking the pre-scene as a whole and summarising it and applying it into lots of different key business models and key business theories before rounding up with my top 10 issues. So these are the most likely things I think are going to come up in the actual exam. So how's it going to work? As I said, I'm going to go through it section by section. I'm going to assume that you haven't read the pre-scene. I'm going to assume that this is all new to you and we are going through it together for the first time. And what I'm going to do is I'm going to ask you to make notes yourself. So I'll stop the videos at the start of each one and ask you to make notes on a certain number of pages, and then we'll go back and review it together. And as I've said, at the end we'll go through a full strategic analysis and top 10 issues. So first of all, some key things that you should be aware of. Now the pre-scene is the context of the exam. It's the context of the company that is being examined. The background information, as it were. So once you've read the pre-scene, this should all be forming a foundation in your mind, and when you go into the actual exam, all the unseen questions that come up in the actual exam, you should be answering them based on this base context from the pre-scene. But it's worth noting that you shouldn't write anything based on the pre-scene. That's because you're not necessarily going to be tested on something that's in the pre-scene. You'll be tested on the unseen material that you are given in the exam. If that unseen material is nothing to do with the material in the pre-scene, then you shouldn't be using the pre-scene material to answer the question. You must always use the unseen material. Having said that, you should always be thinking about the pre-scene material. Now, you're given this in advance for a reason. You're supposed to learn it and you're supposed to gain as much understanding as you can about the company so that you can use this information in the actual exam. So let's move on to the pre-scene then. Now, the first thing I'm going to ask you to do is to read through this first page here and just spend 5-10 minutes looking for it, making some notes, and then come and join me back at the top and we'll go through it together. Now the first thing you'll notice is that the company manufactures cakes and desserts, which is not exactly surprising given that they are a bakery. Now the first major point here on this first line is packaging. Now what we can read from this is we can ask ourselves the question of whether the goods are packaged on site or whether they are outsourced, and if they are done by First Class Bakery on site, is there an outsourcing opportunity here? Now the reason why this is an important issue is because, as you well know, packaging and the quality of the packaging is a key marketing aspect. Consumers will often purchase a product based on the quality and the attractiveness of the packaging. And if it is not a core competence of First Class Bakery to create decent packaging, then perhaps it is worth looking at whether an external company can come in and produce finer, higher quality packaging. Now, of course, with outsourcing, you always have to be careful about letting people know too much about your organization. You want to keep certain things very private. Now, for First Class Bakery, this could be things such as the ingredients in their cake, or the way that the cakes are mixed, or the way that they are cooked, the way that they are processed. Now, based on the information we have here, we cannot tell exactly how they are packaged or how First Class Bakery packages them, but we can probably guess that they are not, it is not core competence of the business. Which means that it is something that could potentially be outsourced. Now, you may be sat there thinking, well, by packaging them on site, they can then sell them directly off site. So they would have to then transport the unpackaged cakes to the company that does the packaging. But that's not necessarily true, because outsourced companies can come into your organization and do the packaging or do whatever it is they have been outsourced to do on site. And it could be that they are a lot cheaper than First Class Bakery's own way of packaging. If it's not something that is too important to the organization, then perhaps their method is outdated, their method is too expensive, and therefore it is certainly something to consider. However, we don't have enough information yet to make a firm statement as to how they are packaged or whether their packaging is good enough. So next we move on to this second part here about being sold directly to retailers. Now, obviously there are three main ways in which products are sold. They are sold directly to consumers, directly to retailers, or to wholesalers. Now, one of the advantages of selling directly to food retailers is you are cutting out that wholesale middleman. So when a wholesaler purchases from a supplier, obviously the wholesaler needs to charge a higher price when they in turn sell it on to retailers to get their own margin, which of course may often limit the price in which the wholesaler can buy it from the supplier. The flip side of this, of course, being that by not selling to wholesale, you're perhaps limiting your customer base, because you then have to forge all your own relationships with your own buyers rather than passing it on to a wholesaler. It also means that the onus is on First Class Bakery to build strong relationships with its retailers to ensure repeat business and to ensure that they are getting a fair deal. This is particularly interesting for an industry such as bakery, where a vast majority of bakery is bought through smaller shops, and now it's very difficult to forge relationships with smaller retailers if you're directly dealing with everyone. A lot of smaller organizations purchase from wholesale, so you are potentially cutting a significant proportion of the bakery marketplace by dealing purely with retailers and not with wholesale. So the next sentence in this opening paragraph talks about production being carried out at a single site. So this stems back to what we were talking about packaging. So all production is being carried out at this single site in West Beeland. Now, a problem with that is transport. Now, if you are based in one particular site, then of course there is no real issue with transporting work in progress around to different sites. So you can, in effect, complete all your production on this one site quite easily. However, there is an issue with transporting to your customers, to transporting to your retailers in this instance. Now, We have no idea about Beeland at the moment. All we know is that this particular site, First Class Bakery's production site, is in the west of Beeland. Now, Beeland could be an enormous country, it could be a very small country. The west could be the major part of the country, the urban part of the country, or it could be a very sparsely populated place, in which case means there's not going to be that much business in and around West Beeland, and so all transport has to take the goods to other parts of Beeland. Now, it could be that there are economic reasons for why First Class Bakeries decided to set up in West Beeland. It could be that that is a cheaper part of the country where rent and prices are less, so that they can produce more efficiently, they can produce at a cheaper price. But then you have to tie that in with the transportation costs about shipping goods to other parts of Beeland. It will also have an impact on recruitment. Now, as a manufacturing company, it will obviously need a large amount of employees doing fairly manual labour or doing fairly unskilled labour. So they need to have a ready source of workers willing to take on that kind of job, to perform that sort of role. So it could be that West Beeland has a high proportion of unskilled workers and therefore is an ideal place to set up a manufacturing plant. The pre-scene then goes on to say that it has the B dollar as its currency. Now, whenever you see some information about currency, this obviously brings up all kinds of risks, so economic risks and currency risks. Now, at the moment, we have no indication of whether the company sells abroad, but if it does, then obviously the exchange rate and things like that will be an issue. And even if it doesn't, obviously you have internal currency factors such as inflation and interest rates and how that will affect business. Now, cakes and desserts perhaps might be considered a bit of a luxury, and therefore if the economy is in a bad state in Beeland and that the B dollar is particularly weak and there's no interest rates or there's high inflation rates, then perhaps the purchasing of cakes and desserts by the average consumer will be one of the things to go first. So when we're thinking about building a pestle model, an external environment analysis model, we can think of in economic terms here. We know that they operate in a certain currency, and we know that that currency could have all those issues with it, and as a luxury item could be something that is affected by dramatic changes in the economy. So let's move on to the second paragraph now, and the second paragraph kicks off by telling us that most of the cakes that First Class Bakery manufacture are for large food retailers. Now, when you see the word large, you should often think about buyer power. Now, buyer power is one of the 5 components of Porter's 5 forces of competitive analysis. So this tells us how competitive the industry is. And with a large buyer, such as these large food retailers, they can really ramp up the competitiveness of the industry because they can set their own prices, as it were. Now, if you wish to sell into one of these large retailers, they may dictate the price that they pay. You may need to sell the product for a certain amount to meet your margin, but they don't want to pay that price. But at the same time, what are you going to do? They are the large retailer. You depend on selling to them for your own business. So in a sense, you often have to deal with the demands of these large food retailers because they are so important to your business and they have so much power that they can dictate what they do. Now, for example, it says most of the cakes are manufactured for large food retailers. So if a huge proportion of First Class Bakery's business goes into large retailers, then they can't afford to lose them because they would lose the business at the same time. So it's very important that you maintain good relationships with large retailers if you depend on them for your business. But what is interesting here is that they sell the cakes to these retailers who then in turn sell them under their own brand. So this is own label food within the supermarkets or the large food retailers. Now this is very important from a marketing perspective because of course First Class Bakery are not getting the brand, they're not getting the name of First Class Bakery out there if they are selling under the retailer's own label. Now, for example, everyone could rave about the own label bread that comes from the large food retailers and think it's fantastic, but of course they don't know that it comes from First Class Bakery, so it's not building the brand. And this of course links into your 4 P's of marketing that you should have learned during your E1 studies. It's the product is not in the right place. If it is selling under an own label brand in a large food retailer, it's not in the right place to build the brand of the business. And on top of that, the different retailers all require different packaging. Now, for example, retailer 1 will want retailer 1's packaging and retailer 2 will want retailer 2's packaging. So you're also not getting the benefits of producing the exact same packaging over and over again that you would do if First Class Bakery packaged them as their own brand. So if you've got 100 cakes and 20 of them are split into 5 groups of 20, each are going to a different customer that requires different packaging, you're going to lose money on the packaging in comparison to just building 100 cases. This could also lead to an increase in wastage. So if you have perhaps produced X amount of cakes for a certain retailer, but then the retailer decides they only want half of them, what do you do with the other half? Because they've already been wrapped and packaged up in that particular retailer's packaging, and therefore you cannot sell them on to another retailer without unpackaging them, of course, which risks damaging the product, and it's still wastage of the packaging itself, even if you can salvage the cake. However, then goes on to say that some products are sold in first class packaging. So cakes and desserts are sold to small independent food retailers under First Class Bakery's own brand. Now, the issues with small independent retailers, as I mentioned when I spoke about wholesale, is it's very difficult to forge good relationships with many small customers who only perhaps purchase a certain amount every so often. You can't have a dedicated customer development team for them in the same way as you may have for one of the larger retailers. And this of course becomes particularly difficult in instances like credit control, when you've got to perhaps monitor all these various different independent food retailers and check that they're paying their credit off in time. And how do you chase all these companies up when you may not have the resources to do so? However, it's also slightly easier perhaps to assert your own power upon them, your supplier power upon these smaller retailers, because First Class Bakery perhaps is a larger company than these small independent retailers, and so it can exert its influence over them. And so that brings us back to our Porter's 5 forces, this time to do with supplier power. However, the good thing about selling under the First Class Bakery's own brand is it's more about getting the brand out there. It shows that the brand does have an outlet. If they sold purely to retailers under retailer-owned branding, then no one may even know about First Class Bakery. And again, there's another mention here about sales and about B-dollar currency. Currently, all sales are made in Beeland. Now, perhaps there is an opportunity for selling abroad then, if the supermarkets or the large food retailers within Beeland dominate the bakery market, then perhaps there's the potential to look abroad for markets where there is perhaps less of a dominant presence by larger food retailers, and it would be a good opportunity for First Class Bakery to get the brand known abroad. Of course, when you think about dealing with companies abroad, you have to factor in extra things such as exchange rates here. So if they were to sell to, say, a different country, you then have to worry about the strength of the B dollar against the currency in that other country, and the various ways in which you can combat that risk. For example, you can lead the payments so that where you pay early in anticipation of the exchange rate falling, or you can lag, which is where you delay the payment in anticipation of the exchange rate getting better for your. So now we go on to some information about the history of the company. Now we can see that it was founded over 30 years ago by three brothers, John, James and Frank Mitchell. So the organisation began as a family-owned organisation. So this may have had an impact on the culture of the organisation. Now this is quite an important thing because the bakery industry is full of artisan bakers. So this is small independent bakers, and a lot of consumers like to purchase from small family-owned organizations. So this could be one of the main reasons why the organization grew. However, as we can see, this didn't last for long. Well, it lasted for about 30 years until recently, when the company, or 80% of the company, was purchased by Universal Foods. So 80%, so this is a controlling stake. So regardless of the brothers' continued involvement in the business, the business is now controlled by Universal Foods. And so who is Universal Foods, or who are Universal Foods? They're a large group quoted on Beeland's stock market. Now, when you think about a company that is quoted on the stock market, that brings a lot of different variables with it. For starters, it means that they have to adhere to certain standards that are required of all companies that trade on the stock market. It also means that they have the opportunity to raise more equity financing on the stock market by virtue of being a listed company. The advantage of equity financing, of course, over debt financing is that it allows you to raise more money without having to pay it back in the short term. Obviously, the flip side of this is it does mean giving away more control of the organization. However, earlier on in this section, we spoke about buyer power and supplier power, and how perhaps First Class Bakery didn't have the power to influence large food retailers. But now that they are owned by Universal Foods, a much larger organization, a much larger food supplier, perhaps that will help mitigate the effect of the buyer power of large food retailers, because Universal Foods now can exert their influence on said large food retailers. For instance, if Universal Foods owns many different brands that are very popular in Beeland and are some of the best-selling products in these various large food retailers, Universal Foods could say to these large food retailers, now you're going to stock First Class Bakery bread and cakes and desserts, and you're going to stock them in First Class Bakery packaging. And if you don't do that, then we're going to stop selling you these other key products that the large food retailers need for their own businesses. It then goes on to say that John and James retired from the business following this purchase. And now Frank is the leading remaining brother who is still involved in the business, and he has retained 20% of the business. So Frank is a key stakeholder to the business because he owns 20% of the business. Now that obviously is not a controlling stake, but he still has an interest in the organisation. And in fact is now the managing director of the organisation. So I suppose that goes to show that Universal Foods has at least kept some of that original family-owned culture of the organisation. That's probably one of the reasons why it's been a successful business, and Universal Foods wants to continue that. However, given that Frank has always worked on the production side of the business, it could be argued that does he have the relevant skills and expertise to be the managing director, which of course is a completely different thing to just working with the production. He now has to oversee the entire organisation and ensure all components and parts of the organisation are running smoothly. It's worth noting that having the right level of expertise is important for governance, which of course is not so much an issue for First Class Bakery now that they are a controlled subsidiary of Universal Foods, but it's important to Universal Foods themselves that the right people are running its subsidiary organisation. So since Universal Foods has taken over the organisation, they've brought in a number of key directors and managers from other parts of the business. So again, there is an issue here of relevant expertise. Have these people that they have brought in, have they the relevant experience in the bakery industry? Obviously they have relevant experience in the food industry as a whole, as they've worked for Universal Foods, but can this be directly applied to First Class Bakery? So who are these people that they have brought into the organisation? Well, you see here they've brought in a new finance director and a new marketing director. Now, marketing is an interesting one because it's one we spoke about earlier about do First Class Bakery have a really good marketing strategy? Do they have a really good marketing plan? They sell in First Class Bakery packaging to independent retailers, but not into larger food retailers, which of course does affect the brand, it does affect the exposure of the company. And that's perhaps what Fred Knight here, the new sales and marketing director, can overturn. He can use the company that he works for, Universal Foods, as a leverage to impose upon these retailers the First Class Bakery brand to help get the name out there. And of course a new finance director is very important here. Now that the company is a subsidiary rather than its own organisation, there obviously is going to be an impact on financial statements, an impact on the way the company does its accounting, because of course now it will be part of the Universal Foods group rather than its own company. It will be part of the group structure of Universal Foods. Now a move like this could potentially help First Class Bakery save money. As a family-owned enterprise, perhaps with no people with accounting or finance experience, perhaps the way in which the organisation has been run from a financial perspective has not been the best, or has not been as good as it can be. So by bringing in these experts in finance from Universal Foods' own specialist finance department will perhaps lead to new opportunities to save money, new opportunities to structure the financial aspects of the company more efficiently. And in the final paragraph here on this introductory page, it speaks about the location of First Class Bakery. Now we know that it's in West Beeland, but where in West Beeland? Now it says here it's situated on the outskirts of a major town. Now, a major town is likely to have a high populace, and therefore that links back to what we were saying about recruitment. They're likely to be exposed to a large pool of workers for their business. And this, of course, extends beyond your unskilled workers for the production line, but also for your more skilled workers. people who are going to be brought in to do work in the actual offices as well, because you have the attraction of being near a major place, a major town. Now, for example, one of the big reasons why a lot of companies set up in major cities such as London, Paris, New York is because living in those kind of areas is attractive to new graduates, it's attractive to business people, and therefore it's an attraction to be located in those areas, because it means they can move to those areas. It means they don't have to move from those areas if they already live there. And the company is split up into two different sites. You have the production site, this obviously is where the cakes and desserts are made, and the garage site. Now the garage site is where the distribution fleet is located. And just like we spoke about earlier with packaging, this is also a potential outsourcing opportunity. Is it really efficient for the company to own and run its own delivery fleet? There are masses of delivery companies who specialize purely in delivering other people's products, and therefore there is a potential opportunity here to perhaps save money by bringing in a more experienced and more efficient delivery service for this. And this extends beyond the actual delivery of products, but to the kind of taking care of the fleet. Now, if you've got several vans and lorries, they're going to require a lot of maintenance, they're going to require a lot of running costs, all these things that are really not related to First Class Bakery's main method of main operations, the production of cakes. Perhaps it's something that they're not an expert in, and could do with outsourcing that to someone who already has a state-of-the-art fleet, a state-of-the-art garage, where they can perhaps deliver the products at a far reduced price than what First Class Bakery currently pays to do it themselves. And this introductory section finishes by speaking about the production site itself. So it mentions that the site is large, with the main production in a single building, but several separate buildings for stores and offices. So perhaps what you can read from this is that the site is too large for their operations. Why would they need separate buildings for their offices? Couldn't they be an annex on the main production? Obviously we have no information about the buildings at the moment, but it seems like to have to rent or to purchase two different buildings for two different parts of the organization seems perhaps like a waste, when perhaps they could be done together in one building. So could be that you may be asked about relocation in the exam. So we've looked at various different issues related to location here. They're in West Beeland. We don't know whether that's the best place for them to be. We don't know what West Beeland is like in comparison to the rest of Beeland, or what it's like in relation to where its goods are transported, or about potential cost savings about moving to different sites. So, for example, you could be asked in the exam, the finance director has looked over the costing of the building and the price of the building and our distribution routes, etc., and feels that there perhaps is savings to be made by relocating the offices to this particular site in North Beeland, which is closer to our major clients, it's closer to a larger pool of workers, and it is the setup costs of the factories and the rents, etc., are cheaper. And then of course you have the implications there of you'll make the people who currently work for you redundant unless they're willing to relocate with you, and that of course brings in your people competencies, your ethics behind that. So that brings us to the end of the first video in this pre-scene video series. Please join me for the next one, where we will be going through the different products that the company makes. So I hope you've enjoyed this sample video of the Astranti Operational Pre-Scene Analysis video series. If you wish to find out more about the complete series and about the other products that we have here, such as the tuition video series, the masterclass, the mock exam with marking and feedback, all geared up to help you pass the exam, please visit the website on www.astranti.com.